Hey, it's George Corrali. It's Tuesday, Election Day, November 3rd. Thanks for tuning in. Last week we talked about 90% days, and I want to dedicate the couple of minutes we have here to that subject this afternoon. Investors' emotional reactions typically coincide with significant market tops and market bottoms. 90% days are an indicator, they're a tool used to objectively identify stock market bottoms. It's based solely on supply and demand. Once a 90% day is registered, it usually indicates that investors have begun to panic. So it's a process of exhausting sellers or creating a selling climax. Here's an example. This chart is from the summer of 2016. You can see the sharp sell-off following Britain's unexpected vote to leave the European Union. There was a 90% downside day on June 24th on the New York Stock Exchange, and another one the following trading session on the NASDAQ on June 27th. So ideally, usually within a few days, the 90% downside day should be followed by one or more days of very intense buying, a 90% upside day or days. For the New York Stock Exchange, back-to-back 90% upside days were recorded on June 28th and June 29th, and the correction was over. Have you ever heard of the saying or the phrase, the market never bottoms on a Friday? This is a good illustration. The June 24th decline occurred on a Friday, and the market bottomed on June 27th. Consecutive 90% upside days are a relatively rare development and have usually been registered near the beginning of important intermediate to long-term advances. Two consecutive 80% upside days, while obviously they're not as strong as 90% upside days, but they too have they're usually registered near a or at a short-term to intermediate term market advance as well. Since Lowry's research introduced their systematic approach to 90% days, it has proven repeatedly to be a valuable tool in identifying the extremes of human psychology that occur near major market bottoms. Obviously, you shouldn't base your entire investment program on one indicator, but this has a long history and it's one that we followed over the years. In terms of the current market, we registered a 90% downside day on Monday of last week. On Wednesday, we had an 88% downside day. Friday's decline was a 59% downside day, so that lessened the probability that we were going to get a decline like earlier this year. Yesterday was an 80% upside day, so we need another one today to give us a buy signal. Currently, the Dow Jones Industrial Average is up over 600 points. It's an 85% upside day so far, but we need to hold these gains into the close. So we'll be watching, and we'll see you back here soon.